Right, welcome everybody. This is Bruce from BC Accounting Services. We're an accounting firm and we're offering these free videos to help everybody and anybody who is a little bit confused when it comes to accounting and reporting thereof. Today's topic is going to be income statements. This is a very common report. It's often called profit and loss or an income statement. And this can either be done quarterly, monthly, quarterly, or even 6 months, depending on what sector you're in. And then the final one that's made up for the year, excuse me, which is the one that is reported in the annual financial statements. That's a topic for a different video. So, breakdown of the income statement. Basically, this is everything. Please don't get scared of the numbers. There's a lot of numbers on here, but they're all pretty much the same. If you cancel out all of these, let's just do this quickly. It certainly doesn't look as daunting anymore. So let's use this one. So first up is the company name. So the company name or a trading as name, or even an income statement can be done for a branch or a section, or really does depend on what you're looking for. So let's go with this. First up is an income statement is always for a period. As I said before, month, quarterly, every other month, yearly. It can be for any period. Normally the maximum is a year, and then you go comparison to previous years. So first up is sales. This, let me just unhide this because it's relevant. This is a made-up company, and the sales, as you can see, it doesn't all add up, but this is just for illustration purposes. Sales are across the top here, 12 months in this case, and this can be broken down into various subsections. Normally 4 or 5 is probably the best, otherwise you're going into pretty detailed reporting, and an income statement is just a basic overview for that period. So you can put in this company is obviously a manufacturing concern with bread, milk, let's go here, called flour. So basically it all goes in here and adds up at the end of the year. Next on the income statement is the cost of sales section. Being a manufacturing concern, there will be cost of sales. Often in a service industry such as a sales and accounting firm, there isn't really a cost of sales in the technical aspect of it. We do report some cost of sales, but that's personal preference. So these guys make purchases, direct selling costs, materials, and in March they, in fact, a lot of the year they buy tools and small equipment. These are all under the threshold for depreciation. And then operating costs. So all of these add up to this amount here. So sales, amount of cost of sales is gross profit. It's a simple equation. Sales is often called income or turnover, depending on what your particular company uses. They all mean the same thing. So that's it. Cost of sales is often called variable sales, and the basis behind this is that if there were no sales, there should be, technically, there should be no cost of sales. Hence why it's called variable. So it's the next section is overheads or expenses or fixed costs. These are costs that will be there pretty much on the same sort of amount every month. say, for instance, here, these guys will use our services of a financial manager at 15,000 Rand a month, and it's a constant. As you can see, these guys have also got a advert in the local magazines, so there's the fixed amounts. What is also considered a fixed amount, but can vary, is something like salaries. Now, you see there's pretty much a fixed, because they're just made up numbers, but also if you look here, there's some variations. Now, something obviously happened in, when it was August, and their staff was either short paid or not paid or whatever the situation was. They also, in December, another variation can be bonuses. So this company pays out a lot of bonuses. Actually, all the staff get it, and it's reflected in that major jump. So the rest of them are within a certain band of amounts, will be pretty much the same. You see, rent is another classic example of not changing at all. What is very nice about a income statement is you can pick up trends. Now, if you look here, in this column here, June, there was a massive dip in sales and a massive increase in cost of sales, which led to quite a big loss. And also, further on in the year, November, December is obviously the big months for this company. And if you bread and milk and flours, it's the end of the year and people are using it more often, etc. So it's a big difference. And also then the following months, January, February, here sales are down. It's been a very bad time for certain companies, and you can see that reflected in the net profit. So basically, sales minus cost of sales is gross profit. Gross profit minus expenses is net profit. There it is. And these guys did fairly well. It's a net profit of 3.2 million. Now, that's not the end of it. That's where a lot of companies end, but accountants go one further in that you have to take into account the tax involved in there. Now, in South Africa, it's 28%, as you can have a look in this formula bar at that formula. So 28% of 382,403 is 107,073 Rand, which means the net profit, which is those two subtracted each other, is 275,000 Rand. Now, this is not paid over every month. In fact, we can just formularize that. As you can see, the first one was a loss, so that actually won't be anything at all. What will that be? And along down the bottom here, there. So it won't be paid over every month. This is just a general guideline on what your tax will be at the end of the year. This is before all the allowable deductions such as depreciation. Okay, so that's basically it. So let's just recap. Company name at the top here, income statement for period of, this is for February 2018, this is a full year. As I said, you can have a 3-month, 6-month, and you can even have, most common is probably a year. That's possibly the longest. And that's it. Thanks so much for coming along and watching. If there's any questions, leave it in the comments below. Thank you very much. Bye.